Hello and welcome to Distributed Systems and Blockchain in the News. My name is Thomas Bocek, and today we will cover the following topics. So the first article is about cloud comparisons. So this article here, they compare cloud providers, AWS, Azure, and Google, and also the Oracle Cloud Platform. So they compare the storage, see which one is cheap, which one is expensive. So for example, Azure here for the cloud storage is quite cheap, but they're actually close together. And they also compare here the on-demand pricing for general purpose, for compute optimized. Here we see AWS leading, but for the compute optimized, they compare the Google Cloud Platform, which is quite expensive, but they have 16 gigabytes of RAM, the others have 8 gigabytes of RAM, so the comparison is not that fair, but you get a notion of how expensive those cloud providers are. So it's definitely worth an article to take a look at. They also acknowledge that if you have here vCPUs, that not every vCPU is the same. That means you can have even different architectures, but still their conclusion is also kind of interesting. That's why you need automation to optimize cloud costs. So you need an additional layer to get the optimal cost. Otherwise, they say you pay twice as much. So you need another engine that computes how much or for which cloud providers you should go to save the most or to get most of the value out of these cloud providers. That also shows the complexity in this pricing, those cloud pricings, which is also not always that easy to compare, because some cloud providers have faster machines, some have slower machine, but they still have they count the vCPUs. So yeah, pricing and cost benefit ratio, it's difficult to compare. They try it, so definitely it's worth to have a look at. And also there, I found this link about this benchmark site, which showed that actually the Google platform, they have the best throughput in every kind of benchmark. AWS has the lowest latencies, and Azure has the best I/O performance. So that means it's very difficult to compare the prices, do your own benchmarks, and see what works and what's cheap and what's expensive. The next article, I think it's a nice story, or has a nice storyline. It's the two channels problem we discussed in the lecture about Paxos and Raft. So this explains why we need those algorithms, and this author starts here with Alice and Bob, the two channels problem, starts to discussing it, and then moves then over to flight scheduling system, and a flight scheduling system with hotel reservation. So it's a kind of a nice story and definitely worth to look at. So now the big news, it's about the stablecoin, which is not that stable anymore. The UST, if we go and check the price of the Terra USD, which should be pegged to the US dollar. So it's not pegged actually, it should be at $1. Currently it's at it's a wild ride today, almost at 70 cents. Today in the morning it was down at 30 cents, so it seems to recover. And if we go and look at other stable coins, how they should look like, so here we have Tether almost at $1, USDC at $1. So this is how stable coins should look like. We have also Binance USD at $1, and probably DAI also at $1. But here the Terra USD, if we go and look what happened today. So it was here down at 30%, and that should not happen. So there's a story on Coindesk, gives you a good overview, doesn't go too much into details, but gives you a good overview what happened. So definitely here something that you can read up. And I was digging a bit more. So what is TerraUSD? Well, first of all, Terra is a protocol that runs this UST algorithmic stablecoin. They have other parts or other components in the system. It's a chain, it's a blockchain for lending, borrowing, for savings. So this runs on a separate blockchain, on the Terra blockchain, based on Cosmos SDK. There are other chains also based on Cosmos SDK, for example, the Tor chain. I already mentioned this. I'm involved in Tor wallet, which runs on the Tor chain, so I'm a bit familiar with the Cosmos SDK, but this is just the underlying blockchain, and it does not run the proof of work, so there's not much computation involved, and it's eco-friendly, I would say. And you also hear a lot about Anchor, the Anchor protocol. There are more, for example, staking. There's Lido, and there's also Astroport. So here is actually a good overview what the Terra protocol is, how it's linked with Terra and other TerraUSD and UST. And yeah, here the components. So that Anchor protocol, it's a lending protocol. For Terra, we Lido use staking, and you have also market maker, which is called Astroport. And yeah, they also have mentioned about the crash, and I'm also going to cover this a bit more in detail. So a stablecoin is actually packed to the US dollar. As I mentioned, USDC and UST, they have collateral, so that means they're backed by fiat assets. Their collateral are fiat assets, so that means if somebody wants to have one USDC or one USDT, there should be on a banking account the equivalent amount, or at least a fraction of it, so that if somebody wants to exchange the USDC to something else, or people wanna cash out, they should be able to get the US dollars out of it, because it should be packed. They also intervene in the market, so they're tightly coupled with exchanges, and if they see there's something is going on, they can react quite quickly to that and try to liquidate their fiat assets if necessary, and buy or sell their USDC or USDT. For UST, there is no fiat collateral. This is kind of special. So this is called an algorithmic stablecoin. There's a counter currency or pair, which is Luna. It's the Luna token, and into the whole system, in the Terra system, the price of how much worth is a Luna token, how much worth is a USD token, this is being fed from outside by oracles, so it's baked into the protocol that this information is coming from outside. Now, US3 and Luna works as follows, that if you want to get UST, you need to buy Luna. There's a price for UST, and you need to pay, or you need to get the Luna first, and with that you can then mint UST, and the Luna gets burned. That means if the demand and everything stays the same, that UST, the supply gets bigger, the Luna supply gets smaller, so the price of UST should actually go up, and but this should only be done when the price is kind of lower of USDT, below $1 US dollar, and it should go up. So then users are incentivized to do that. On the other hand, if it's too high and it should go down, then you just do the opposite. In order to get the Luna, you buy the UST. So you get the UST, mint Lunas for that, and then you burn the UST. So the supply of UST gets smaller, the supply of Luna gets bigger, and then you have less UST, and that means the price goes down again. So this is the basic mechanism, how it should work. I tried to understand their white paper, so they have a nice white paper here, which they wrote. Actually, if you read about Terra, you will see or hear a lot about this guy here. So he also is very active on Twitter, trying to speak about the situation and to calm the people down. So in this paper, here what I didn't fully understand is that the miners, they will always get UST. So here the miner compensation, so they get transaction fees, and the miner also gets Terra. So as far as I understood the white paper, so the system means Terra, and I believe this is then given to the miner, and also earns Luna, and part of this Luna is burned, and the rest, the remaining portion, goes to the treasury. So the remaining part of the Luna goes to the treasury. So in the long term, the system is meant to that the demand is increasing, and interesting also what happens in the short term. And what should happen right now is here. So the miners absorb short-term Terra volatility, but it's actually not the miners as far as I understood, but those are the users and the ones who are doing the arbitrage. And we are in this situation here now. So this SDR is just another currency, can be seen as Terra USDT. This SDR is another basket, and this can be replaced with Terra USDT. So if Terra USDT is lower than 1 USD, which is currently the case because we saw it's at 70 cents, then users and arbitrageurs, they can send 1 Terra UST to the system. That means currently I can buy for 70 cents, I can buy 1 Terra UST, send it to the system, and receive receive Luna worth of 1 US dollar. That means I can go to the market and sell the Luna. So I got the Luna quite cheap, so I paid 70 cents and get worth Luna worth $1. Go to the market and sell the Luna, and then I can make profit 30%, because it's currently it's at the Terra USD is at 70%, so I would make a profit out of that. And what I don't understand is this is a mechanism that actually should work, and it's not, because this arbitrage opportunity is here. And I would expect with this kind of arbitrage opportunity that the Terra UST will go to the peg, and the Luna token will fall down, obviously, because everybody is now dumping Lunas, but by dumping it, so the price will go down there, and this should make the price of UST go to $1 US again. So this is the theory. It doesn't happen currently. I actually don't know why. So based on the white paper, there's a huge arbitrage possibility. there is possibility to make money. Also, today in the morning, the UST token was at 30 cents. So if you bought today morning at 30 cents, you could now sell at 70 cents. But yeah, it's always a risk, and you never know, will it go down, more down, or will it go up? So yeah, that's always a gamble here. What was the reason for this depegging? It could be that Bitcoin is crashing. So beginning of May, so this was the 5th of May, it was still at 40,000 US dollar. Now it's around 29. So it's crashing. All the other currencies are crashing as well. And if there is a huge sell-off, this could also destabilize this algorithmic stablecoin. Also the Luna, if we go and see how much Luna lost, then we see it was here 1 month ago, it was trading at almost 100 US dollar, and then suddenly it fell, and now currently it is at $1.80. And this is actually the reason people are or users are arbitraging. They are getting cheap Lunas, selling it on the market, so the price drops in order to get the peg of UST to $1 US. I don't know how much it will fall further. It can go below 1. I don't know. We will see later on, probably in a couple of days. So what did Luna do? They actually burned a lot of UST to shrink the supply, to make the price go up. They also issued more than 120 million Lunas. There is a nice site here, Terra Analytics, that shows what's going on. Here we see that, where is the graph? Here the UST total supply, and suddenly it goes down. That means they burned UST to make the price go up. And also the Luna total supply, just the opposite. So the Luna, the amount of Luna goes up. That means also that the price we have seen from almost $100 to now $1.70. This is the reason, since the Luna supply was increased heavily. And currently it's around 70 70 cents I saw. So it seems to go back to normal. Where is Terra? Here it's back at 66. So still it's a wild ride. And 65. So oops, here it may go down again. So it's like a roller coaster. That's yeah, it's going down. There is one tweet who says, or who describes that it's an attack. I'm not sure if it's an attack or not, but this tweet here on Chain Wizard, it's a quite credible source that highlights the history, lays out the timeline, what happened, who sold what, and how much profit more or less was or could have been made by this attack if it was an attack. So he comes then to the conclusion that the attack, if it was an attack, was bringing roughly profit of $850 million US dollars. So that would have been, if it's an attack, one of the largest DeFi hacks so far. I always talk about DeFi hacks, so if it's an attack, this one would be a really huge one. It sounds credible. I did not fully understand how this works with those pools, since there were pools involved. Liquidity from those pools were withdrawn, because the pool brings stability also to these stable coins, and by withdrawing, this safety net is gone, and then another trade made that the UST loses the peg, and once the peg is lost, people are panicking, selling even more. There are lots of factors involved in the current situation with TerraUSD, with Luna, with those pools, if it was an attack or not. Currently the situation is not that clear. It might have been an attack, but I will keep you updated, and I guess next week we will know more. I also found a very interesting article from Bloomberg. So this article was published on the 23rd of March about the DeFi app promising 20% interest on stablecoins. That is TerraUSD, so they promised 20%, and they're calling this the biggest and most dangerous example of a doomed to fail project. Very interesting article. It's also about the Anchor protocol, and that implosion of Luna would be catastrophic. Here the biggest and most dangerous example of a doomed to fail project. So there were critical voices already in the past, before the depegging happened, and now what's being currently discussed is, so this is here in the Anchor protocol community, that they will reduce the interest rate from 20% to 4%, because that 20% on a stable coin, on the US dollar, seems not sustainable. More bad news. So El Salvador is expected to default, so go bankrupt. And El Salvador, they switched, or they made it possible to pay in El Salvador with Bitcoin, so it's a legal currency in El Salvador. And this article tries to link the bankruptcy to the Bitcoin that is now in free fall. I mentioned that from 40,000 now to 30,000. And in the article they mentioned that El Salvador bought Bitcoins worth of 25 million US dollar here. I then checked and saw that they have GDP of around 60 billion US dollars, so 25 million is something like 0.04%. So in my opinion, it's negligible. And in 2023 they need to repay back a loan, 800 million euro bonds, which is not clear if they manage to repay it. However, I don't think from this article that this can be linked to Bitcoin. Maybe it is, but just this article explains it quite badly. And the last article, more bad news. It's about Coinbase. So Coinbase, or actually the article mentions Coinbase earnings were bad. Worse still, the crypto exchange is now warning that bankruptcy could wipe out user funds. So the Coinbase company, they had a quarterly loss of 430 30 million US dollars. They also lost quite some many users. Almost 20% of monthly users are not on their platform trading anymore, and with trading, with the fees, they generate revenues, and the shares are now down by 15%. The article, which I really like, then discusses the difference between custodial and non-custodial, so that Coinbase is a custodial centralized exchange, and they mentioned the importance of private keys. Non-custodial, they also mentioned that Coinbase has an app which is called Coinbase Wallet, where you have the control over your private keys. That means you are in control of your assets, and even if Coinbase is going bankrupt, you still have control over these assets. However, if you have it on a regular Coinbase account where Coinbase has custody over your assets, then what they mention is that if they go bankruptcy, this assets will be property of bankruptcy estate. So if Coinbase goes bankrupt, this is actually the document that the article is referring to. So this is a document for the SEC, for the Securities and Exchange Commission, and the CEO Brian Armstrong already replied on Twitter that this mentioning of how to handle bankruptcy is part of risk factor disclosure that they have to do for the SEC, and there is no risk of bankruptcy of Coinbase. So lots of bad news, but I would say the last two articles, they match the market sentiment, so everything's going down. There are negative articles. It's not as negative if you read about it a bit more. And the biggest happening currently, Terra with Luna and UST. We will see next week if the UST will reach the peg of $1 or if it will go down, what happens with Luna, and if it was an attack or not, and how it happened.